Hello and welcome to another episode of the Investing with IBD podcast. It's Justin Nielsen here, and it is February 26th, 2025. We are glad to have you with us. We're, of course, as we do every week on Wednesdays, live at 5 Eastern, coming to you on YouTube, and then also you can get our access to our podcast after the fact on whatever podcast channel you enjoy, whether it's Apple, Spotify, what have you. But thanks for joining us. And I'm also pleased to announce that we've got Vibha Jha that is joining us today as a first-time guest. She's been on IBD Live and, someone that we've talked to a number of times on the IBD Live show. So I'm really happy to have you on our show, the podcast.
It's my pleasure to be here, Justin. I love you guys. I watch you all the time, and it's an honor to be here.
So for those of you that don't know, Vibha has, she seems to be one of those consistent members of the leaderboard on the U.S. Investing Championship. I feel like it's been a number of years. You seem to always be in the top 10, top 5, top 2, you're always up there. So to just start out, I want to kind of pick your brain a little bit on how do you find yourself getting such consistent results?
So I stick with my strategy, and I think that's, something that's important for people to realize. The best strategy is one that you can actually execute. So there's so many people, if you listen to the people that have won, they have various strategies. I stick to my strategy, and my strategy is a combination of TQQQ as well as picking the type of growth stocks that show up in IBD 50, sector leaders, IPO leaders, and that's what I stick to. So yes, I have not ever been number one, but if you kind of do the math when it comes to the compounding, I've done really well. I'm not saying that to brag. I'm saying that I don't have to work. Like, I'm able to let my investing support my life, and that's my goal. And so that's how I've done that.
Yeah. And I mean, every time I've talked to you, it seems like you're doing a lot of fun things. You're doing trips, you're getting ready for trips,
Yeah.
you're supporting your family, you're doing all of these things to, again, not be glued to the screen. So maybe walk through a little bit of your routine. How long does it take you to do this? And again, the results, as you said, they're not number one, but they don't need to be number one. They don't need to be 400% each year to
Yeah.
do pretty gosh darn well.
Yeah. So again, in fairness, the years where I had triple digit returns, which were 2020 and 2021, I was sitting in front of the screen. Again, COVID made it easier because there was nowhere to go. In
Right.
2020, there was nowhere to go. 2021, I entered the competition that Mark Minervini was in, and I shared this with you. I am, I have confidence in myself, but I'm also not delusional. I didn't enter in the competition that Mark was in thinking I would beat him. I entered thinking I want to push myself and learn how to be a better trader, because
Mhm.
I've always been, in my mind, that sometimes there's a difference between investing and trading. Investing to me feels a little bit longer term. Trading, if you're actively trading, you have to be more aware of like the day-to-day nuances, which I never was. The only charts I looked at were weekly charts because, like, I love Bill O'Neill, and I listened to, watched whatever he taught. And but so I had to push myself to be more focused on the daily,
Mhm.
and so I'm sorry, I missed, like, tell me again what your question was.
Well, no, no. I mean, you basically answered it because again, for your best results, you seem to have gone to a more very active approach
Yeah.
sitting at your computer, but you also get very good results sometimes
And
doing
now I
less.
do. So now my routine. So, before, when I was doing that very active routine, I was watching the market every day. I was doing my weekly routine of where I would get the weekly paper. I'm still a person who looks at the paper, and I would identify, what stocks have earnings and sales of more than 25%. Like, what has a accumulation distribution rating of A, what, like, where is, like, really looking at all of the stuff that was in Can Slim. But now my routine, it's almost a little bit embarrassing to say, but I mainly follow TQQQ. And when I have extra cash to put in, then I will put it into other things. But literally right now, like, at the end of the day, I watch where did the market close? Are we under distribution? What are the highs and the lows? Is there a trading range right now? And we'll talk about this after. TQQQ has been in a trading range of $73 to $93. As long as it stays in that range, it's not doing anything that is changing character, so I can look at my watch and see where is the stock, and then I don't have to do anything else. So right now my routine is I spend a couple of minutes at the end of the day in general when I'm trying to put money. And also, I think I had mentioned to you guys before, I'm retired, I don't have money coming in the market. When I had money coming in the market, I'm always trying to find somewhere to put it. Right now I have to like sell something to buy something else, and so as long as TQQQ is doing what I expect, I'm just letting it go.
Mm-hmm. Yeah. So before we get into your TQQQ strategy, and for those that don't know, we keep on using the term. It is a triple leveraged version of QQQ, which is the NASDAQ 100. So the benefit is you are getting access to the 100 NASDAQ companies, non-financial, top companies, names that we all recognize. I mean, heck, you can see the commercials all the time. But you get access to that. But instead of as a single, a single movement, you're getting a triple movement. And it's worth remembering that that's on a daily basis. We just talked with Will Ryan from Granite Shares, talking about how, these instruments are really about daily, not necessarily long term. But a lot of times you do turn your TQQQ into a little bit of a longer term trade for yourself, as long as it's acting right.
I do. And, for me, and I've shared this on IBD Live, TQQQ was not intended to be long term, right? It was more that, okay, like when there is a follow through day, and we have talked about this too. Now you guys have changed the definition. Not that you've changed the definition. I have to learn how the new way that you guys kind of characterize this. But in the past it was very easy to just see, okay, the market was in a correction, now there's a follow through day. I don't necessarily know what stocks I want to buy, especially if I'm trying to buy something in a larger size. So let me get into TQQQ as my holding place, and then I sell down. And I think that's why for me, we've talked about this before, I have just very few entry points and a lot of sell points, because most of the time I'm selling it because I'm trying to go into something else.
Yeah. So let's get into that a little bit, because we should talk about your strategies here, because again, you are very consistent in your application of your strategies. It's one of those things where I think you're a little bit more comfortable going heavy in that,
Yeah.
because you are disciplined and you know your levels. So maybe you can walk me through. You often say that your entries are a little bit easier, which I find that to be the case so many times. The entries are easier. It's the sell signals that are a little bit more nebulous. It's not just one. Sometimes it's multiple things, and you have to kind of add them all together. So let's start with your buys. What is it that you look for when you're going to enter a TQQQ position?
Yeah, there's really only two spots. Although, as you said, now maybe because I have to figure out what a true follow through day is, I have to, adjust my criteria a little bit. But it's typically after the market has gone into an intermediate correction. So in my mind, for whether it's the Nasdaq or S&P, maybe like a 8% correction, 5 to 8% correction, like something that tends to happen pretty frequently, then I'm starting to look for a bottom. I do not buy on the bottom day. A lot of people, they ask me, oh, if you go and you look at the chart, like you could have bought on this day. And I'm like, yeah, but when it is the bottom day, you don't know it's the bottom day till many days after. And if you pull up
Right.
EQQQ 73, 34, 39 was the most recent bottom. If you set your market surge to that date and look at it, it doesn't look like that's the bottom. It looks like it's going to keep going lower. So you really don't know until it's a few days after. So I wait for 3 to 4 days of either higher highs and higher lows, or here I'm gonna put on my glasses so I
Oh,
can.
I was just putting this up so that you could so
Yeah,
people that are watching this. A lot of
yeah.
people
So
do
so
listen
if
to
you
it, but
yeah so
here's that 73.34.
yeah, so Justin, if you change, so it's 226, change it to, I think it was January 13th, 15th, something like that in January. I want to go to what the 73.34 day was. Okay, yes. Okay, so again, for anyone that's a technical trader, if you look at this, like, is your first thought going to be, oh, today is a bottom? For me, I was like, okay, it's going to go down to the 200-day moving average. Like, look to the left of the chart. To me, charts are like people. They have personalities, right? And some personalities can change. But if I'm looking at this chart, I expected it to go down to the 200-day moving average. It did not. Okay, but I didn't know that on this day. So when I go in, my entry point, I'm thinking I don't want to risk more than 10% of my capital, and I need a place to get out. So if you look at that day, the 200-day moving average, I believe it was more than, again, first of all, it was the first day of it like showing some support, so I wouldn't normally get in at that. So yes, it was 8% above the 200-day moving average, but I was thinking, if you look to the left of the chart, anytime it undercut the 50-day, it generally went down to the 200-day. So in my mind, my hypothesis is it's going to go down to the 200-day. And yeah, if you push forward a few days, it didn't do that, but I didn't know that at the time. And so, yeah, so look at maybe the third day. So generally, when I look for the third to fourth day of you can do the fourth day, that's fine too, because so on, right. Okay. So that third day, it had an up day, but it was a gap up. And so again, I was a little bit slow here. And I know, I love listening to Mike Webster. He said that the follow through day that we didn't really need happen, like even the day after this red thing that you have. But at the time, I didn't know that. So I'm thinking to myself, okay, all the other times in recent days, it has come down to the 200-day moving average. It didn't do that. Do I know that this is a follow-through day? I didn't know that. And then when you go to that fifth day, if you can click on that fifth bar and look at how far extended is it from the 200-day.
17.6.
17.6%. I was not willing to enter at that point because I would have to be mentally prepared for it to go down 17.6%. Now, people can look at it and say, well, why wouldn't you set it at the 50-day moving average, which is a very reasonable place that I typically set. But when I look to the left of the chart, when it's like kind of circling around this 50 days, sometimes it goes down to the 200-day. So I was not willing to risk my capital. And there were other people, some people have reached out to me. They were like, oh, they bought on and great. But if you had bought on that follow through day, my sell rule, which again, I have a lot of sell signals, and my brother was telling me, he said, there's a lot of things you don't say that you actually do, because I think it's so ingrained in me that I don't even think to mention it. Like, my line in the sand is if it undercuts day one of a rally, that is a sell rule, that there's no thinking of what percent I'm out. So day one of this rally was that 73.34. It's so far above it that and as you can see, if you look on the daily chart to the left, TQQQ has lots of gaps up and gaps down. I could not find a place where I felt like the stock is going to do what it's going to do. Am I willing to go down to 73.34 on that follow through day? I'm not. So I did not get in.
Mm-hmm. So let's fast forward a few more days, and of course,
you could, yeah.
It really, started again gapping up really strongly, and then on Friday we started getting DeepSeek news coming out, and a big hit on January 27th. So again, this kind of is back in that little chop fest that we were dealing with and are still dealing with to a degree. So talk a little bit about this. Now it's closer to that 73.34, but in a really weird position because you're gapping down below the 50-day moving average line.
Yes, and you guys are going to think I'm crazy. This is against every rule probably that Bill O'Neill or Mark Minervini or all the market experts would have said. This is the day I got in, okay? And again, I would not do this with an individual stock. So the rules I follow for TQQQ are very different from, in general, what I do with my individual holdings. But okay, so this is my thought process. Okay, so we're on January 27th. So I'm looking at this and I'm saying, okay, my hypothesis was that it was going to pull down to the 200-day moving average based on, that 73.34 day. It did not do that, right? And that day where we had follow through day. At that point, it was too far extended from the 200-day moving average. I could not see a point of where can I get in and have like a reasonable place to get out. So by this point, by January 27th, there were enough trading days that happened that to me, I felt like I can set a stop loss at 73.34, because if you look at a weekly chart,
here we go.
It's trading in a range, right? And it's trading in a range. And so if it undercuts that range, then it's still trying to find a bottom, then it's probably going to go to the 200-day. If it does not undercut that range, then it's basing and it should hopefully be going up from there. So I got in that day because even though it was a gap down, it closed in the upper half of the range. The volume was high, right? So even if it's a pink day, if it closes in the upper half of the range and the volume is high, to me, it's a sign of support. It's not going lower. And if it did go lower, if I was wrong, I got in at 78. If I was wrong and it went down below 73.34, I'm not risking more than 10% of my capital. So yes, sometimes, like in some of these strategies, it has to be counterintuitive. It's like, okay, maybe, the sharks are circling and you kind of feel that even with what's happened, like since Friday, and you and I, we were talking about this, right? That it's like most of the time I come on your show and I'm like, I'm defensive, like I think the market is extended. And, Friday was an ugly day. A lot of things came off my chart, but I'm actually optimistic here. Maybe I'm crazy, but I feel like, again, if you have to look at the ranges. There's no stock that's going to go up, like all the time. If it does, it's going to come down at some point, but like you have to understand the market is going to go up and down, and so you just have to be prepared for when it comes down. And I was prepared. Today was a really important day because it had multiple down days, right? But it held this 73.34. That's my line in the sand. And now the 200-day moving average is moving up. So if it undercuts the 200-day moving average and 73.34, I'm going to be completely out. If it doesn't do that, then I'm going to, yes, it's not fun. On days when the market is down, like it was on Friday, I don't look at where my portfolio is because I know it's going to be down. I'm looking at the chart and saying, did it do something wrong? No, it does come down. It's watching how it responds to where it is, and then you make a decision. But you need to know that in advance because otherwise you're going to see a bad down day and you're going to be like, you're just going to get out. And again, even that bad down day, it was down 6%. On December 18th, it was down 10%. So yes, it was a bad day, but it was not as bad as how it was in December, which is where I got out on December 16th. So that's also another thing that when I'm, again, like, when we were talking about the competition, and the competition, it's calendar year or whatever, but I'm looking at my real money. So yes, if I got out at 93 and now I'm attempting to get back in at 78, if I'm wrong, I'll get out, but I'm still in a better place than I was if I just held it.
So let's talk about that a little bit because it's really interesting. You have mentioned a number of times, kind of really trying to find your spot. It's too extended here. It's the bottom here. You're really looking for that kind of Goldilocks scenario, and I really appreciate that you spend so much time really kind of nailing your spot, buying right so that you have your exit strategy in place. But let's talk a little bit about the selling side, because of course you've been talking about your defensive part, where you're going to protect yourself, where you're going to protect your capital. But for a lot of folks looking at this on December 16th, they'd be like, why on earth are you selling? This looks great.
Okay, so there are the technical signs, and there's also like the my personality and psychology. So let's go to the technical signs first. So I got in on September 11th. Okay, so go to September 11th. Okay, right. So 3 strong days. And again, we were talking about recently about the 200-day moving average. This is where it was a strong day, 3 days up, no gap up, and it was above the 200-day moving average. So I got in somewhere in the middle of the range of that day once it overtook the like I felt confident once it overtook the 200-day moving average. But even if you look at the peak, right? So now if you go to December 16th, look how much it's gained, right? In a very short period of time. And I shared this with you guys on IBD Live that the reason I do investing is to take care of my family and to have financial freedom. And in order to do those things, you have to sell, like on paper, things look great, but if you don't actually have the cash, I don't work. I need to take money out. And usually I do that at the end of the year. So on December 16th, usually I'll look in December, between mid-December to end of December, I'm trying to get, raise cash. I'm trying to figure out what I need for the next couple of years so that I don't have to trade under stress. So when I looked at this, and also I have 2 December birthdays in my immediate family, I host my family. So I'm thinking to myself, okay, it's December 16th, my family's coming, my daughter's birthday, we're going to New York, whatever. I'm like, I don't want to spend the next 2 weeks looking at charts. So I'm happy with the gain I've gotten. And from a technical perspective, so those are the psychological things, from a technical perspective, it was more than 10% extended above the 21 EMA, which is something that I do look at. And the bulls versus bears, which are typically a secondary indicator, it had been above 60% for a few weeks. I think when I was on your show on December 6th, I was saying I'm starting to get a little bit anxious about this. So in my mind, the question I always ask myself is, what is the probability that it's going to go up 10% from here? Or what is the probability it's going to go down 10% from here? And again, Bill's thing was you need a 3-to-1, profit to loss ratio. Mark Minervini talks about at least 2-to-1. But in this case, I was already at a profit, right? So I'm not thinking about that profit and loss. I'm just thinking about what is the probability. And I said to myself, you know what? Where it is right now, I'm very happy with the gain I've gotten. Yes, maybe I'm going to miss a little bit on the way up, but I'm getting out. I got out it was 93.17, I think. And then you can fast forward a couple days.
Yeah.
It crashed. So again, it was, there's a little bit of luck involved, but it's also recognizing that because of the volatility, when you look at something like TQQQ, when you have a good gain, take something off the table. Yes, you're going to leave stuff. I never get in at the bottom and I never get out at the top. I think that 93 was probably the closest I've ever gotten to getting out at the top. Most of the time I get out well before, but it's, when you think about compounding, right? There's the rule of 72. I'm sure a lot of your viewers are familiar with that. It's, if you look at whatever your gain is and you take 72 divided by that, that will tell you how long it takes to double your money, right? And so I always kind of look at it from the perspective of I need to lock in some gains. And, I don't remember who said this. It was somebody super famous, but I don't remember off the top of my head. But they were like, if you don't get out early, you're going to get out too late, right?
Yeah.
So you need a strategy for when to get out. And for me, part of it is when I've done really well, I'm locking in gains. And yes, I do leave money on the table for sure.
Well, and one of the things in talking to you, Viva, that really strikes me is that you do not trade from a position of fear. And for someone who has to live off of your trading, there's something to be said for that, and again, I think you have a lot of rules in place to make sure that you don't trade from a place of fear. And that includes fear of missing out, which is all really hard for a lot of people because, one of the things we were talking about is, you can see a lot of stocks come up and you're like, oh, I missed it. It gapped up, or I just wasn't paying attention. And you seem very disciplined again on not chasing things and recognizing, hey, I've gotta take my shot when everything is kind of in place, as opposed to, oh, I missed it. I don't want to I don't want to be left behind. Let me chase this thing.
No, to me, I mean, this seems so obvious, but I think for a lot of people, they don't think this way. Cash is a position. And if I'm in cash, that doesn't bother me, right? Yes, there's inflationary risk, whatever, but to me, cash is a position. And if I don't feel like I have a good, because buying right is if you buy right, then you can let things come down, right? Like I shared with you guys, I bought Nvidia in 2016. I have sold most of it. I still have a small position in Nvidia, but when you buy right, you can sit through pullbacks, you can sit through drawdowns, you can sit through because you've already captured your gains. And but cash is a position, and I believe that. I don't believe in chasing things. Palantir, that's another, it's a beautiful stock, and but not now, but it was a beautiful stock, and people were like, they're getting in at the highs because of that FOMO. But if you got in at the highs, I'm watching it now because it's very close to the 50-day moving average. It's come down super hard. So am I going to buy it now? No, but I'm going to look for it to form a base, and if I can get like a good entry point that is within 8% of the 10-week moving average, I will get in. But no, I'm going to look for strength. But yes, so a lot of people, they were like, how did you weren't in Palantir, or like, didn't you have FOMO? I'm like, no, I missed it, but you have to be disciplined. And when you trade out of fear, like, I honestly believe this, right? Like, if you do anything out of fear, you're going to make decisions that aren't the best for you.
Yeah,
So,
absolutely.
so and as you said, so again, I know not everyone. I'm so grateful for the life I've had. I'm so grateful for the opportunities I've had. But I keep a few years worth of cash because when I read How to Make Money in Stocks, Bill O'Neill had said that in general, again, you've got years that are going to be different, but I think the average correction was 2.5 years. I'm saying this to you, Justin. You probably know this way better than me. You can correct my numbers, but so my thought was, if I have 3 years worth of cash, even if the market crashes, I'm not worried about how am I going to pay my mortgage? How am I going to get food? How am I going to, I'm thinking from, okay, from a stock perspective, when is the right time to get in? And so again, for people that aren't retired, for people that are working, think of it, it's like you have your paycheck, right? So invest the money that you can, invest without being scared of it going down, because it's going to go down. You just have to be prepared. So for me, I've shared this before. I know all the best, Bill O'Neill, Mark Minervini, they have super concentrated positions. I was not able to do that. Why? Because I don't watch the market every day. If I had a 10% position and then or a 20% position, I missed something, it would like come down really hard. I couldn't sit and let it come down to the levels that I really like. So I go with smaller positions. And yes, does that mean that, because I'm not concentrated, that I'm leaving money on the table when I have an Nvidia? Of course. But at the same time, I could sit through Nvidia's drawdowns because
Yeah.
I let it pull back because I'm prepared. And, a number of people have said this, that the best stocks, when the market crashes, 80% of stocks will go down 50% or more, and maybe 50% of stocks will go down 80% or more. So am I prepared for that? And I only will have a position size where, if that happens, not that I want it to happen or not that I'm expecting it to happen, but if it happens, I'm not out. Like, I'm
Right.
still able to do what I need to do.
So let's shift a little bit to kind of a little bit more of the stock discussion, and then I want to circle back and kind of talk about the current market. But you are talking about some longer term holdings here on your stock. So again, you're very you already told us about how precise you are on your entries for TQQQ. What about for stocks? What is it that you're looking for when you're getting into a stock? How much of it is fundamental? How much of it is technical? What's your process there?
Yeah. So I've been asked that before. I always start with fundamentals. So it's hard for me to put a percentage, because if it does not meet my fundamentals, I don't even look at it. Again, I've missed a lot of stocks that had great technicals and I just never got in. And again, that doesn't bother me. So from a fundamental perspective, I am a Can't Slim advocate. So I look for like very strong, even to kind of narrow it down, very strong earnings and sales, a minimum of 25%. Most of the stocks where I have done well, I think they had earnings and sales of 40% or higher. That's just going back and looking at my stuff. There's not any rule about that, but 25%. I look for the market to be in an uptrend. I buy early stage bases, stage one or stage two, as Bill O'Neill defined them. And why do I buy early stage bases? Because he said many of the great leaders, they do pull back. They will undercut the 50-day. They will undercut the 10-week when they're forming a new base. And again, hopefully at that point you have a profit cushion. But I'm buying an early stage base so that I can hold it for a few pullbacks and not, again, yes, it doesn't feel good when it pulls
Right.
back, but if it's to be expected and the great stocks have done that, then I'm thinking, okay, I have a position size I'm comfortable with. It's pulling back, but this is to be expected. It's going to happen, and I'm going to just let it do its thing. Yes, when you have it, when it comes down like a knife and it's not acting right, that's different. But a lot of the great stocks, they have orderly pullbacks, but they
Hmm.
still come undercut, and so that's okay. So early stage bases, very strong, earnings and sales. I do care about like the institutional sponsorship. So I look at things like the up down ratio. I look at your accumulation distribution rating. You guys have made it so easy with the tools that you provide, and I look at price and volume. And again, I don't watch the news that much, but again, I've heard some rumblings about, okay, is volume accurate? Is it not accurate? It's not so much about the volume. It's more about like, look at the supply and demand. And to me, the easiest way to gauge supply and demand is the price and volume action. For other people, they might have other rules. But if, I'm looking at that, and that's where I pick things. And so a lot of times when I'm getting in, I'm it's hard, like when the market right now, right, like we've had some recent pullbacks or whatever, but really the market has been going up since the end of 2022, right? So a lot of stocks are in like higher stage basis. So if I'm buying with the intention to hold it through pullbacks, I generally won't go in if it's a stage 3 or stage 4 base. You know,
Right.
um,
So let's maybe talk about a few of the stocks that are on your radar right now, and you can kind of talk about why. Where would you like to start?
Duolingo.
Duolingo, and yeah, this is one that I actually owned. Pretty recently. I bought it here, but I got scared out, especially ahead of earnings. So what is it that you're looking for on this one? And do you do you use this? I know that you know Spanish very well, right?
Well, I Spanish was one of my majors in college, which was many years ago. So
Okay.
I had
I'm still working on Spanish myself, so maybe
no,
I need
it's
to.
not. But so my husband and I were going to Machu Picchu, so I'm going to do like a crash refresher course on Spanish.
Okay.
But yeah, so I did many years ago. I'm in my 50s now. In my 20s, I was a very good Spanish speaker, not so much anymore.
Okay.
But I did use Duolingo. I used it when my family was going to France. I used it to learn French, which was another language I learned when I was in high school and college. And one other thing I have to share about Duolingo. So when I was in the investing championship in 2024, I had Duolingo and I got shaken out. I bought it like in February or March. I got shaken out, and so when it recovered in August of 2024, I bought it in a different account. I didn't buy it in my championship account. I bought it in a different account. But so what I like about it, first of all, it's a product I've used and it's very fun. So you and I we've talked before. We joke around that usually I follow what my kids are doing and it's served me very well. This is something I did myself and I liked it. So I believe in the product. And if you look at the fundamentals on the weekly chart, they have great earnings and sales in the last quarter. Again, 600% earnings, 40% sales. you know After COVID, there's been a huge demand for travel, and when people are traveling, a lot of times they want to learn. If they're going to a country where they don't know the language, they want to learn. So Duolingo, to me, it fits that trend of traveling. I do look ahead to the next 1 to 2 quarters. I don't look ahead more than that because when I was at Aetna and I was responsible for earnings for the business segment that I owned, it doesn't matter how great of a strategy you have. You can't predict what's going to happen in the world,
Right.
right? So any company that's trying to tell you what they're going to do for 5 years, that's their intention, but can they actually achieve it? I don't know. I have my doubts, but generally the next few quarters, companies know because, they have contracts locked in, or they know what's going on with the short-term direction. So this has, it has great, prospects going forward. And I know the stock. And one of my favorite things, as I've said, is I need to size to, or not size. I need to set a stop loss to a level that I believe even if a stock is acting right, it can pull back to. And many times it's the 10-week moving average. So here it is, and again, it has earnings in 2 days. Or 1 day now, I guess. I don't buy right before earnings, but I'm going to wait for earnings. If I can get in within 8% of the 10-week moving average, I'm getting in like when it's turning up from forming a base. That's what attracts me, the fundamentals, as well as from a technical perspective and from my stop loss setting perspective. It's something where I would be comfortable with this.
No, makes sense. One of the stocks that you were putting on my radar, one that hadn't really kind of crossed my liquidity requirements, was a United Kingdom stock. And remind me what the name of that was, Merex?
MRX.
MRX, yeah. So this is a recent IPO, and again, sometimes overseas it might have a little bit less liquidity here, but maybe it's a big blockbuster. Now this one looks like it's already gone on quite a run. So how do you kind of see yourself getting into this one?
So I'm not in it right now. You've had Kathy Donnelly on your show. I love her. I love the IPO. The IPO book that she and Eve Babak and other people have written about.
The life
And
cycle
so
trade, yeah.
life cycle trade, yeah. So this to me looks like it's on a run, but I have not gotten in. I would need to find a position where it would be able to pull back to the 10-week moving average. And right now, I think it's pretty extended. So I would not be able to get in now, but it is on my radar because when you see, I'm thinking back to like how to make money in stocks and all those, 100 charts that Bill shared. A lot of the strong companies, they have charts that look like this, right? So it's finding the right time to get in. So for me, I have not yet. As you said, the market cap is pretty small. I would probably, if I were to initiate, I would go with a small position, but right now it's not at a level where I think I could set a good stop loss.
And we didn't talk too much about this, but with your individual stocks, how much are you willing to let it come in on you? Especially when you've had something for a long time, you've got some good gains on it. How much of those are you willing to give up in order to get an even bigger gain potentially?
Yeah, so I have a couple of rules. Again, these are not scientific. I'm not a professional investor. I'm kind of like a regular person who's figured out how to make this work for me. So this is something I learned from one of my brothers. If I have a stock that goes up 100%, I sell half of it, and that way, even if it comes down to zero, I'm still haven't. Again, a lot of people, whatever gains you have, that is your real money, right? But I still think of it as, okay, like if it's proven itself, I'm going to take my gains and then I'm going to let it run. The other rule that I have that I think I shared this on IBD Live is every year at the end of the year, I look at my whole portfolio. I decide what I want to keep. I look at the position sizes and I decide what position size am I comfortable with if this stock were to go down 80% or 50%. And so again, it's the opposite of the concentration that a lot of the true, experts do. I'm not a true expert, so I scale down. So Nvidia is a perfect example. My dollar cost basis on the position I have in Nvidia is under $1. So it can pull back to whatever, I'm still going to make money on it. So once I have made my gain, and I sold a lot of it on the way up. So right now, the only reason I'm holding Nvidia is because I believe in their story. And at the point that I no longer believe in their story, I'm getting out. So once I've made the gains I want to make, the only companies I hold are the ones where I believe in their story. Otherwise, there's so many other opportunities out there. And if I believe in the story, then I'm going to wait until I no longer believe in the story. Once I've made my money and I have a gain, then I wait. So the pullbacks, they don't bother me.
And in order to get to your cost basis, I mean, we have to go on a monthly chart to kind of get down to the dollar level.
It was
Um,
2016.
yeah,
I,
so 2016, I
Mhm.
mean, it was coming out of a perfect cup with handle in March
Yep.
of 2016. It was around $32 at the time. Of course, now it's had some splits. Do you ever, if you're selling into some of this strength and taking some off the table, do you ever buy back the position and kind of go back in heavier?
Yeah, so people have asked me that. So remember, like I quit my job in 2013. I have no new money coming in. So in order for me to add or buy back, I have to sell something else. So I think that's why I don't add, because I don't have new money coming in. But
Mhm.
yes, if I had new money coming in, for sure, there's Nvidia gave you multiple opportunities to get
Yeah.
in.
Okay, I want to circle back. Let's go back to the market, and I'm just going to pull up the Nasdaq,
Mm.
or you know what? Let's do the Qs. And I was wondering, the entire time when you're looking at the levels, you were looking at TQQQ,
Mm-hmm.
which again sometimes will act a little bit differently long term, especially when you get into a choppy market. So, based on the QQQ action here. What is kind of and we can switch back to TQQQ
Oh, yeah,
since
you
you know that those numbers so much better. But what is kind of your assessment of the market? We're still kind of in this choppy phase,
can.
so that can be kind of detrimental for leveraged instruments.
Yep.
How do you handle that? Are you selling some as we get to the top of the range, or are you how are you handling it?
Yeah, so again, it's trading in a range, so it's not doing anything that is unexpected. So my entry level where I got in, it was where if it undercut that, in if you look at the Qs, the 499 point, 499.7, if it undercut that, it's no longer trading in a range. So whatever my hypothesis would have been would be wrong. And then maybe it's going to go down to the 200-day. So I would get out. As long as it's trading in a range, I let it fluctuate. It's volatile. And if you can't handle the volatility, then this isn't the right stock for you. Right now, the range is 93.79, 73.34. So as long as it stays above the 200-day moving average, it stays above the 73.34, I'm holding it. When it goes to the 93.79, I'm going to be looking for, does it hit resistance or does it break through that? If it hits resistance, the first time it hits resistance, I'm still going to watch. The second time it hits resistance, maybe I will sell some, I'm still going to watch. The third time it hits resistance and is not able to break through, then I'm getting out, because most likely it's going to pull back. And again, there's no science behind it. It's just what I've observed from watching this for many, many
Hmm.
years.
And one other kind of question here is right now the Qs seem a little bit weaker than
Mhm.
SPY.
Yeah.
So the relative strength has come in. If we just look at the S&P 500, or we can pull up SPY, the ETF. You know, this has been holding up a little bit better. It didn't
Yeah.
undercut this level
Yeah.
like the Nasdaq did, or the Qs. It's still holding, well above that level. But do you ever switch to UPRO to get the triple leverage there instead of TQQQ?
I I have not, and again, a lot of people, they ask me about UPRO. A lot of people ask me about SQQQ. Um, Again, SQQQ is the opposite, right, of what you're talking about here. But I have not, because I don't know those charts, right? And so my strategy is I trade TQQQ or individual stocks. So as you said, yes, TQQQ is not acting as strong. So I have different individual stocks that are on my watch list, and my intention is not to hold TQQQ long term. It's okay, when I find something to get into, I'm going to get out. Um, but yes, for
And use
for
that as a source of funds to fund your individual
exactly.
stock purchases. Yeah.
Exactly. And instead of like being in cash when the market looks like it has turned around, I'm getting some gains, right? And then
Mhm.
again, it takes some of the pressure off, that FOMO you talked about. I don't have FOMO because my money is invested in something that I feel confident in. So, yeah, so then I'm going to be super selective. On IBD Live, we talked about, I don't marry stocks, but I do move in with them. I want something I can hold for some period of time, hopefully a long time, So that's my strategy. And if I can't, then I will just let it be in TQQQ and I go in and out of TQQQ and cash. But yes, I think like the S&P 500, it has a lot more, QQQ is more technology or whatever, like the growth stocks. You have financial stocks in S&P 500, so it is much more diverse. And when I started my trading career, I took half of my money and I put it in the S&P 500 dollar cost averaging every paycheck. And then I traded individual stocks, and it wasn't until I gained that confidence and had really good gains that I stopped investing. So in S&P 500. So I think that you can't go wrong.
Yeah, yeah. Again, there's a lot of ways to make money in the market. You do have to find what's right for you, and it really does seem like you found that. You found what works for you and lets you lead the lifestyle that you want. So, congratulations on that. Congratulations on being on the U.S. Investing Championship leaderboard once again. Again, it's a nice accomplishment. So while you keep on referring to yourself as not a true expert, you're no slouch. I should also mention that was in the $1 million plus money manager division. So you weren't using chump change to get those results.
This is real money. This is real money, and this is what I live off. So again, it's great to have big gains, but my goal is to, I can't touch my IRAs yet. I'm not at that age. My goal is to be able to live my life, and so.
Yeah. Vibha, it was so great having you on the podcast. I'm just sad that we waited so long, so I'm sure we'll do it again, but really appreciate you coming on.
Thank you so much.
Absolutely. That's going to wrap it up for us this week. Thank you so much for joining us. And of course, next week, we're going to be right back here live at 5 on Wednesday. And this time around, we're going to have Dan Fitzpatrick, who is visiting us again. He, of course, is from the stockmarketmentor.com. He has been on IBD Live a number of times, trained under John Bollinger. He's a real fascinating trader, and we'll get into what he thinks about the market and some of his strategies. So we hope you join us for that. Thanks a lot for watching. We'll see you next time.